Corporate tax exemption for qualifying public benefit entities. Qualifying public benefit entities, which meet a set of necessary conditions, can apply to the Ministry of Finance for inclusion in a cabinet decision that formally grants them an exemption from corporate tax. Cabinet Decision Number 37 of 2023 outlines the list of entities recognized as qualifying public benefit entities and underscores their significance within the UAE's social and cultural landscape. This exemption reflects the UAE's recognition of the critical role these entities play in fostering social welfare and public benefit through a range of activities. Role and recognition of qualifying public benefit entities. Qualifying public benefit entities contribute significantly to the social, cultural, and public welfare spheres of the UAE. To acknowledge their value and societal contributions, such entities may qualify for exemption from corporate tax. However, eligibility for this exemption is contingent on meeting specific criteria designed to ensure that the entity remains focused on its charitable or public benefit mission. Criteria for exemption from corporate tax. To be eligible for a corporate tax exemption, qualifying public benefit entities must be established and operated for one of the following purposes. 1. Public benefit activities. Entities must operate exclusively for public benefit activities. The corporate tax law provides a non-exhaustive list of categories that may qualify a public benefit entity for this exemption. These worthy purpose categories include activities related to religious endeavors, charitable work, scientific advancement, artistic and cultural development, athletic and sports activities, educational initiatives, healthcare and medical services, environmental protection, humanitarian assistance, animal protection, any other similar activities that contribute to public benefit. This list offers broad coverage to ensure that various forms of social contributions are recognized and eligible for tax exemptions. 2. Professional and social welfare organizations. Entities operating as professional bodies, chambers of commerce, or similar entities focused exclusively on the promotion of social welfare or other public benefits are also eligible for exemption. These entities work to support community welfare and create networks that enhance societal well-being. Additional conditions for corporate tax exemption. In addition to the primary purpose-based criteria, qualifying public benefit entities must satisfy the following conditions to ensure alignment with their public benefit mission. 1. Non-commercial activities. The entity must not conduct any business or business activity unless it is directly related to its charitable or public benefit purpose. This stipulation prevents the use of the entity's resources for unrelated commercial ventures and ensures focus on its intended mission. 2. Dedicated use of income and assets. All income and assets generated by the entity must be used solely for achieving its established purposes or for necessary and reasonable expenditure essential to fulfilling its mission. This requirement underscores the commitment to public benefit and prevents the diversion of resources for other purposes. 3. Restriction on personal benefit. The entity must not utilize any of its income or assets for the personal gain of its shareholders, members, trustees, founders, or settlers. The only exception to this rule applies if such shareholders, members, trustees, founders, or settlers are themselves qualifying public benefit entities, government entities, or government-controlled entities. This condition preserves the integrity of the public benefit focus by eliminating the potential for private benefit from entity assets. Application and approval process. To become a qualifying public benefit entity, an organization must apply to the Ministry of Finance. Upon approval, the entity is listed in a cabinet decision, such as Cabinet Decision Number 37 of 2023, which outlines the specific entities that qualify for this exemption. Once listed, the qualifying public benefit entity is exempt from corporate tax beginning with the tax period in which it is officially included in the relevant cabinet decision. Ongoing compliance and monitoring. The exemption for qualifying public benefit entities is not granted indefinitely without oversight. The Federal Tax Authority, FTA, plays a key role in ensuring that exempt entities continue to meet the necessary conditions. To monitor compliance, the FTA may request relevant information or records from a qualifying public benefit entity. The requested information may include financial records, books and records demonstrating that the entity's resources are used solely for its public benefit mission. Agreements and contracts, copies of agreements entered into by the entity to verify alignment with its stated purposes. Organizational details, information on employees, officers, and fiduciaries to ensure operational integrity. The FTA's monitoring activities aim to confirm that qualifying public benefit entities remain dedicated to their public benefit mission and do not deviate from the conditions outlined for exemption. If an entity fails to maintain compliance, it risks removal from the list of exempt entities. Periodic updates to the list of qualifying public benefit entities. The list of qualifying public benefit entities, as established by the Cabinet decision, may be updated periodically to reflect changes, additions, or removals. This ensures that the list remains current and continues to represent entities that uphold their public benefit missions and comply with the exemption conditions. Consultation and further guidance. Entities seeking detailed guidance on the requirements and application process for becoming a qualifying public benefit entity, as well as on the conditions for maintaining tax exemption, should refer to Cabinet Decision Number 37 of 2023 on qualifying public benefit entities. This document offers comprehensive insights into the applicable criteria, procedures, and obligations for entities operating under this classification.